Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you are new here, hit that subscribe button and join our growing community of traders. In this video, we are diving into something crucial for anyone who wants to thrive in the fast-paced Forex market. Okay, so specifically, we are going to be looking at a short-term Forex trading strategy that you can use to, to scalp the markets, right? If you want to be a fast-paced trader, then this strategy is one that you can start using right away. So you might want to grab your notepad because this is one packed video with actionable tips, right? So first of all, let us get on the same page. What exactly is short-term Forex trading? In simple terms, it's a trading style where positions are opened and closed within a short period, often within a single day. Now, this approach focuses on capturing small price movements in the market, and it requires precise timing and strategy. Unlike long-term trading, where you might hold positions for weeks or months, short-term trading is all about being agile, quick, and decisive. But don't let that intimidate you. Once you understand the essentials, it becomes a lot easier to navigate. Okay, now let us talk about the building blocks of a solid short-term Forex trading strategy. The first is chart analysis and time frames. The first step is choosing the right time frame. All right, for short-term trading, the most commonly used charts are the 1 minute, the 5 minute, and the 15-minute charts. Okay, these give you a detailed view of price movements, allowing you to spot patterns quickly. So it's also important that you pay close attention to candlestick patterns and key levels of support and resistance. Okay, these are your roadmap for identifying potential entry and exit points. So once your chart is there before you, it's important that you begin to plot your support and resistance zones, because these zones are going to play very important roles for you. All right, both your horizontal support and resistance levels and your trend lines, these levels are important levels. Okay, in terms of short-term trading, these levels can give you a heads up as to possible places where price could reverse or perhaps a continuation could occur and all of that. Okay, so once your chart is set up, the next step is to plan your trades. All right, so for entry points, look for moments when the market shows strong momentum in a particular direction. Indicators like the MACD or the RSI can help confirm these movements. So we're just going to be adding the RSI to the chart, for example. All right, now we're going to be using price action in this strategy. Okay, we're going to be using price action. So you identify your support and resistance zones, and then you look out for chart patterns or candlestick patterns that tell you where the market is going. So for example, we can see that there was a resistance here and we had triple top. In fact, about 4 rejections just around this point. This is 1, this is 2, this is 3, this is 4, right? And can we see that after the 4th touch, there was an engulfing bearish candlestick pattern, right? So this would have been a good place to enter a sell and set stop loss above the resistance, right? Remember that this is scalping, so you want to take advantage of every possible valid price move. So we would have entered around here, set stop loss above here, and taking our profit somewhere around here, the nearest support. Then as price moved up and we saw that it got rejected again, automatically we know that this downtrend is valid. So we could have considered entering a sell, setting stop loss above here, and taking our profit here again, right? We have to be sure that price is going to break through this support before we go ahead and continue selling. So after we sold here, as price went up again and formed this candlestick pattern, this bearish candlestick pattern, we can consider it in another sell, setting stop loss above here, and we can see that price had already break through this point, and it even break through this point again, and then we can take our profit at the next support level. All right. So this is scalping. You want to take advantage of every single price movement, right? So make sure that you always get confirmation. So using the RSI for our confirmation, when we enter the sell here, we can see that the RSI was trending downwards. And after we sold, when we took our profit here, you can see that RSI was already in the oversold territory, pointing upwards. So that was a good exit signal. And then when we entered another sell here, the RSI had gone up and it's already coming down again. So that confirmed our sell entry. When we exited here, you can see that the RSI had entered oversold territory. When we entered again, you can see the RSI went up and was pointing down. So that confirmed our sell. Then when we exited here again, you can see the RSI was in oversold territory. So basically, the RSI is serving as our confirmation tool as we scalp the market. Now, in terms of risk management, this is where most traders go wrong. Risk management isn't just about setting a stop loss, all right? It's about determining how much of your capital to risk per trade. A good rule of thumb is to risk no more than 1 to 2% of your account on any single trade. Remember, the goal is to stay in the game, not to hit a home run on every trade, all right? Consistency is key, and proper risk management is your best friend in achieving that, okay? Now that we have covered the basics, let me share some pro tips to give you the edge. Number one, stick to a plan. Have a clear trading plan, okay? It is very essential. This includes knowing exactly when to enter and exit trades, how much to risk, and what your goals are for each session. Number two, avoid trading. Over trading, I mean. Avoid over trading, all right? It is easy to get caught up in the excitement, especially when the market is moving fast. But over trading can lead to emotional decisions and unnecessary losses. Stay disciplined and stick to your plan, all right? Number three, track your trades. Always keep a trading journal. Write down your entry and exit points, the reason behind your trade and the outcome. Over time, this will help you identify patterns in your decision making and improve your strategy. And then finally, practice, practice, practice. Before jumping into live trades, spend time practicing on a demo account. This will help you get comfortable with the strategy without risking real money. All right. So there you have it, a guide to mastering short-term Forex trading. Remember, this strategy is not about predicting the market. It's about reacting to what the market is doing and making informed decisions. All right. If you found this video helpful, give it a thumbs up and share it with others who might benefit. Don't forget to subscribe and hit the notification bell so you never miss an update. We've got plenty more Forex tips and strategies coming your way. Now, I'd love to hear from you. What's your favorite short-term trading strategy? Drop your thoughts in the comments below and let's get the conversation started. Until next time, happy trading.